Imagine this. You wake up one morning, expecting another typical day in the world of digital currencies, only to see screaming headlines. Bitcoin and Ethereum, the twin titans of the crypto universe, are locked in the most intense standoff ever witnessed. The entire balance of power is tilting. At stake? The future of money itself. Which giant will lead the next revolution? And more importantly, what does this mean for your investments and the global economy? Let's embark on this journey, decode the data, and explore the real consequences for your portfolio and the broader world of finance. To understand how we reached this pivotal moment, we need to rewind to the dawn of crypto history. When Bitcoin was launched in January 2009, it was more than just a technical experiment. It was a radical vision, a digital alternative to traditional money, promising security, scarcity, and freedom from central banks. For more than a decade, Bitcoin has served as the North Star for crypto markets. Its dominance, often tracked as a percentage of total market capitalization, has been a key barometer. Every time Bitcoin soared, whether during the first halving cycle, the initial coin offering boom of 2017, or the parabolic rally during the pandemic, confidence in the entire industry soared with it. Conversely, when Bitcoin stumbled, a wave of uncertainty would sweep through, and altcoins would briefly steal the spotlight. But Bitcoin's iron grip has never been absolute. Over the years, each wave of innovation, like the explosion of decentralized finance, or DeFi, and the non-fungible token mania, has chipped away at its market share. Still, Bitcoin remained the monetary backbone, the digital gold. Many large investors, institutions, and even governments have come to view Bitcoin as a hedge against inflation and instability. MicroStrategy, the publicly traded intelligence firm, famously poured billions into Bitcoin reserves, adding thousands of coins month after month. As of June in the year 2025, MicroStrategy added nearly 3,000 more Bitcoins to its already massive holdings, underscoring the enduring faith in Bitcoin's value proposition. Enter Ethereum, the disruptor. Conceived by Vitalik Buterin and launched in 2015, Ethereum was never content to simply store value. Its magic was programmability. Ethereum introduced smart contracts, self-executing agreements, that power everything from lending platforms to digital art galleries. With the birth of DeFi, Ethereum became the engine room for a vast new financial ecosystem. And with each step, such as the rollout of NFTs, or non-fungible tokens, and the proliferation of DAOs, or decentralized autonomous organizations, Ethereum's influence has only grown. A major turning point came with Ethereum's transition from proof-of-work to proof-of-stake. This seismic shift, completed with the so-called merge, slashed energy consumption by more than 99%, and paved the way for faster, cheaper, and more scalable transactions. Since then, Ethereum's network security has grown stronger, with its hash rate increasing by 15% in the second quarter of this year. The average staking annual percentage rate has hovered close to 4%, making it an attractive option for both retail and institutional investors seeking passive income in crypto. Recent months have witnessed pivotal changes in crypto power dynamics. In June 2025, Bitcoin's market dominance peaked at 65.1%, a level reminiscent of earlier boom cycles. But by the middle of July, this had slipped to just under 64%. That may sound like a small drop, but in a trillion-dollar market, it represents billions in shifting capital. At the same time, Ethereum's transaction fees plummeted by 1/5 following the implementation of EIP 4844. A major technical upgrade that improved network efficiency. With fees lower, activity surged. Developers launched new decentralized applications, and trading volume on decentralized exchanges spiked. The Altcoin Season Index, an indicator that tracks whether capital is favoring Bitcoin or alternative coins, stood at 31 on July 14th, signaling that while Bitcoin still dominates, the mood is shifting and momentum is building for the next wave of altcoin growth. This is where the story becomes electrifying. Crypto analysts are sharply divided, and the stakes couldn't be higher. Matthew Hyland, a respected digital asset strategist, recently declared, "If Ethereum breaks bullish and remains bullish against Bitcoin, there is a 99% chance Bitcoin dominance is topped." In other words, if this trend persists, we may be on the brink of a new era, one where Bitcoin is no longer the unchallenged king. Kasabe, another well-known trader, points out that Ethereum is forming one of the most obvious bull flag patterns ever seen. suggesting a powerful price breakout is imminent if the market stays favorable. On the other hand, Ash Crypto, a popular social media commentator, notes that recent declines in Bitcoin dominance are largely due to surging capital flows into Ethereum and other altcoins, a trend that must be sustained for a true altcoin season to take hold. But not everyone is buying the hype. Max Kaiser, a legendary Bitcoin advocate and broadcaster, remains fiercely critical of Ethereum. He argues, Ethereum is heading to zero against Bitcoin due to its lack of decentralization and its questionable status as a commodity. Kaiser's position echoes that of many Bitcoin maximalists, who believe only assets with provable scarcity and robust decentralization can survive long-term. Meanwhile, Benjamin Cowan, another veteran analyst, predicts that historical cycles favor Bitcoin regaining dominance by late October, especially as fresh waves of institutional money, such as BlackRock's exchange-traded fund, now holding over 300,000 Bitcoins, continue to flood the market. Let's pull back and examine the broader landscape. The past year has seen a remarkable convergence of factors: institutional adoption, rapid technological evolution, and major regulatory shifts. BlackRock, the world's largest asset manager, has made headlines by expanding its Bitcoin ETF holdings to more than 300,000 coins, a move that signals growing trust from traditional finance. MicroStrategy isn't alone. Other corporate treasuries and funds, from Tesla to Square, have also allocated significant resources to Bitcoin, viewing it as a hedge against macroeconomic instability and the declining purchasing power of fiat currencies. Ethereum, for its part, has accelerated its roadmap. The ecosystem is thriving, with developers pushing forward on Layer 2 scaling solutions, zero-knowledge proofs, and the integration of real-world assets. The rise of tokenized treasury bonds, real estate, and even art on the Ethereum network is blurring the lines between traditional and decentralized finance. The number of active developers on Ethereum recently crossed the 2,000 mark, making it the most vibrant hub for blockchain innovation globally. Meanwhile, the regulatory landscape is undergoing dramatic transformation. The passage of the Genius Stablecoin Act by the Senate Banking Committee in the United States is set to create a comprehensive federal framework for stablecoin regulation by the end of this year. This law aims to provide legal clarity and consumer protection, which could unlock a tidal wave of institutional capital and mainstream adoption. Stablecoins like Tether and USDC are already integral to crypto trading, with Tether's market cap exceeding $110 billion as of July this year. These assets have become vital on-ramps for liquidity, allowing investors to move capital between exchanges and protocols seamlessly. But the numbers tell a complex story. Over the past month, Bitcoin's market share has dropped by nearly 2%. This shift reflects not just technical tweaks, but a deeper change in investor psychology. As Ethereum and altcoins attract more capital, confidence in the broader crypto ecosystem appears to be rising. Yet, the altcoin season index's value of 31 suggests we're still in the early innings. It's not a full-blown altcoin season, at least not yet, but the groundwork is being laid. So what happens if Ethereum truly breaks out and Bitcoin's dominance keeps eroding? Are we witnessing the dawn of an epic altcoin renaissance? Or will Bitcoin's resilience surprise everyone once again? To answer that, let's examine three possible scenarios, each with profound implications for investors, entrepreneurs, and policymakers worldwide. Scenario 1. Bitcoin dominance resurgence. Imagine a world where institutional adoption accelerates, regulatory clarity arrives, and Bitcoin surges towards 70% market dominance. Its price, buoyed by inflows from BlackRock, MicroStrategy, and a growing list of sovereign wealth funds, skyrockets to levels once considered unimaginable. Some analysts project $150,000 or more. In this scenario, Bitcoin cements its role as the digital gold standard. Capital drains from altcoins, many of which struggle for relevance. The narrative becomes one of security, scarcity, and store of value. But there's a potential twist. As interest in decentralized finance, NFTs, and tokenized real-world assets continues to expand, Ethereum's innovations might still attract niche capital, ensuring it never fades entirely from the spotlight. Scenario 2. Ethereum-led altcoin season. Now, envision Ethereum breaking out dramatically. Transaction fees drop by 20%, following another technical upgrade, making it more accessible for millions of users worldwide. The altcoin season index soars past 50, and Ethereum's price, as forecast by VanEck Analysts, rockets toward $22,000 by the end of this decade. If Bitcoin's dominance slips below the psychological threshold of 50%, a wave of optimism could sweep through the market, triggering not only a rally for Ethereum, but for the entire altcoin sector. decentralized finance, non-fungible tokens, and a new generation of real-world asset tokens, like tokenized stocks, bonds, and commodities, could experience explosive growth. Experts like Matthew Hyland insist that, if Ethereum keeps outperforming Bitcoin, there is an overwhelming probability that Bitcoin dominance has already peaked. In this scenario, innovation thrives, but the risks of volatility and regulatory scrutiny increase. Scenario 3. Balanced coexistence. Here, neither Bitcoin nor Ethereum fully prevails. Instead, market dominance stabilizes. Bitcoin commands a solid 55 to 60%, while Ethereum holds a healthy share, perhaps 15 to 20%. Altcoins experience pockets of growth, especially in new sectors like decentralized physical infrastructure networks. Think decentralized wireless, computing, or even ride-sharing protocols built on blockchain. In this world, both coins anchor the financial system, drawing in institutional investors and serving as gateways for new users. The Genius Stablecoin Act accelerates mainstream adoption as stablecoins become regulated, trusted, and widely used for payments, remittances, and international trade. Each scenario offers tantalizing rewards and real dangers. Regulatory crackdowns in major economies, such as the United States, the European Union, or China, could abruptly halt momentum. If lawmakers impose stringent rules on exchanges, wallets, or stablecoins, the resulting uncertainty could drive investors to the sidelines. Technological failures, like buggy software upgrades, hacks, or network outages, could erode trust overnight. And of course, macroeconomic shocks, such as a global recession or a sudden spike in inflation, would ripple through all digital assets, causing sharp price swings. But for optimists, the opportunities are staggering. Blockchain innovation is accelerating at a pace few imagined possible. New sectors, like decentralized physical infrastructure networks, which allow users to earn crypto rewards for sharing bandwidth, storage, or sensor data, are attracting billions in venture capital and developer talent. The integration of crypto into traditional finance is already underway, with banks piloting blockchain-based payment rails and governments exploring central bank digital currencies. The rise of real-world asset tokens is transforming how investors access everything from real estate to fine wine, making previously illiquid assets tradable 24 hours a day, 7 days a week. What does this mean for you, the individual investor or the crypto-curious observer? The message is clear. Stay agile, stay informed, and don't put all your eggs in one basket. In a market defined by rapid change, diversification is not just a buzzword. It's a necessity. Pay close attention to key metrics: Bitcoin's dominance percentage, Ethereum's network upgrades, the adoption of new protocols, and especially regulatory changes like the Genius Stablecoin Act. Track the growth of stablecoins like Tether and USDC, both of which now serve as crucial liquidity bridges across blockchains and exchanges. Take a lesson from the professionals. Stock Money Lizards, a leading analytics group, advises a disciplined approach. Accumulate altcoins only when they are extremely oversold, as measured by a relative strength index below 25 to 30. During periods of extreme hype and frothy valuations, rotate profits back into Bitcoin to mitigate risk. This approach has helped seasoned traders weather the storm during past market cycles. Remember, even the best analysts admit that crypto markets can turn on a dime. Keep your research sharp, follow macroeconomic trends, and stay abreast of technological developments. For instance, the dramatic expansion of Tether's market cap, now exceeding $110 billion, can shift liquidity across the entire ecosystem in a matter of days. It's also crucial to recognize the role of sentiment and narrative. In crypto, stories drive markets as much as data. The rise of meme coins, the viral spread of NFT art, and the sudden popularity of new blockchain games have all moved billions of dollars in capital in astonishingly short periods. Pay attention to social media trends, developer activity, and the emergence of new governance models. These are often the early signals of seismic shifts. At the end of the day, will Ethereum trigger a true altcoin renaissance and dethrone Bitcoin? Or will Bitcoin's institutional might and brand strength prove insurmountable? The honest answer is that the battle is far from decided. We are likely to see sharp swings, unexpected surprises, and new players as both technology and regulation reshape the competitive landscape. What's certain is that Bitcoin and Ethereum, together, are redefining fundamental concepts: money, ownership, and trust itself. Here's a fascinating secret. Every major altcoin season in crypto history was sparked not only by technological breakthroughs, but by powerful shifts in regulation and capital flows. For example, the ICO boom of 2017 coincided with regulatory ambiguity and a surge of international capital. The DeFi summer of 2020 was fueled by both technical innovation and a global search for yield during a period of low interest rates. If that historical pattern holds, the next great bull run may be triggered not just by code, but by the next wave of legislative change or a new financial crisis. So what should you do right now? First, educate yourself. Follow the news, read research reports, and engage with communities on social platforms and forums. Second, manage your risk. Never invest more than you can afford to lose, and use secure wallets and reputable exchanges. Third, stay curious and adaptable. The winners in this space are those who spot emerging trends early, whether it's a new blockchain protocol, a breakthrough in zero-knowledge proofs, or an unexpected regulatory twist. Finally, remember that crypto is a marathon, not a sprint. Today's headlines may fade, but the underlying technological revolution is just getting started. Whether you're Team Bitcoin, Team Ethereum, or betting on the next big thing, such as decentralized AI, real-world asset tokens, or cross-chain interoperability, the only constant is change. If you found this deep dive insightful, don't forget to hit that like button and subscribe for more high-stakes economic analysis. Let us know in the comments. Are you rooting for Bitcoin, Ethereum, or perhaps a dark horse project? Share your thoughts and predictions. Your perspective could inspire a whole new discussion. Stay sharp, stay curious, and as always, invest wisely. The next chapter in the crypto revolution is being written right now.